how to draw trend lines, random lines, and exhaustion zones. All three of these are used pretty frequently. I will say that I typically use random lines more than anything. So like these like random little support and resistance level lines I draw more than anything. But trend lines and exhaustion zones are also used, and I'll show you like how I use these for different reasons. But let's just go ahead and start off with trend lines. So what is a trend line? A trend line is essentially just the market respecting a certain point continuously, but it's moving somewhat diagonally, okay? So here you have the market up, down, higher, high, higher, low, low, higher, higher, low, higher, high, higher, lows. A trend line is just, you would just be taking a trend line from like point A to point B through point C, bam, bam, bam. It's just respecting this area. So it's respecting it, and it's at an angle, okay? So trend lines can go from the bottom of the market like that. They can also be drawn from the top. So like a downward trending market, something like this. Draw a trend line like that. Those are probably the two main kind of directional trend lines, like on top of the market and on below the market. Even sometimes though, you can draw like channels for trend lines. So like say you have a trend line here, and then you can also probably draw one on the top too, and like create like a little bit of a channel. So that's kind of like a channel that can be created using these trend lines. Okay. I didn't write this down, but I also will get into triangle formations. So trend lines. Okay. So that's how you draw a trend line. Like I said, for the majority of the times in the downward trending market, the trend line most of the time is going to be on the top. And then on an uptrending or a bullish market, it's mostly going to be on the bottom. But you can draw channels like this for a bullish market or a bearish market. Either or is perfectly fine. So just keep that in mind. So let's look at some examples. Okay. So right here, what we have is I'll start right here. Okay. So when you're drawing a trend line, you want to mostly connect the wicks to wicks. Like you want to be drawing the trend line from like a wick to another wick. That's ideal. Okay. So I will say with trend lines is out of all three of these, I didn't mean to erase that, but the other one, of all three of these, trend lines have the most gray. Okay, it's not always going to be black and white. You with the random lines or the triangle formations or exhaustion zones, they're pretty definite. But with trend lines, a lot of the times it's mostly just, do I have? You might have to move it around a little bit more. You might have to play with it a little bit more. You might have to be a little bit more dynamic with it, because they kind of change as the market is created. Okay. So for example, let's just say I was drawing a trend line like on the bottom here, right? Let's just look at the market, okay? Actually, we're gonna start from the very top. So let's just say we started from the top up here, right? Had a trend line right here. The first point of your trend line should pretty much always be from like a wick. So you don't really want to start like right here and then start to try to find a trend line. You want to really draw it at a wick, okay? And before I get into that, just in order to get the lines, I'm gonna be using this trend line. Literally, it's called trend line. If you go over here, I don't know if this is the default. If I don't star it, I'm not sure if that's the default, but I have the trend line starred. Then I have it up here in this bar. And so this is just the trend line, okay? And then when you click on it, you can draw, for me, I like to have the angle, the degree. So if you click on it and then go to style and come down here, and it'll be unchecked for you, but if you click angle, then now you'll be able to see the angle of degree, or what I sometimes call the AOA, or the angle of attack, but it's like the angle of degree. So now you can see that, okay? The reason why I say that is because you'll see here in a second. So wick, your first wick, and then your second one, typically you want to put it through like another wick to find like a trend line, and you could just be drawing this all the way out. Okay? So technically, like this is a solid trend line. The reason why I said you have to play with trend lines at times is because sometimes you might be using this trend line, right? And you're saying, okay, well, the market hasn't came up and it hasn't respected this trend line just yet. And it still may, but at the same time, this angle or this market could also be something to this effect. And you brought it down a little bit more, and now you're catching that wick. This is more of a trend line that I would be considered like, the market came up, it respected it, came up, respected it, came up, down. That was bad. Let me go ahead and restart that. Came up, we started our trend line there. Then we had our second touch. Always remember, your trend line begins at this, like you have more confidence in your trend line off the second touch. So if I remove this real quickly and say that the market was just look like this, I would start right here and then my next touch will be right here. So then now I can go and anticipate potentially a third, a fourth, a fifth, and then finally maybe a breakout, etc. But it always is, you can draw it off this first one, but it's always confirmed up to the second touch. So on this touch, I pretty much have confirmed that area is good to go. Like right here is good to go. Okay. Then it's moving down. Now I have like a third touch if I keep this angle. The reason why I said you don't want to have, or you want to put on the angle for the trend lines is because typically, like if you have a trend line that's too steep, it's probably off. So like if I had a trend line and it was like negative 40, negative 50, negative 55, 60, if it looked like that, that's a really, really steep trend line. I'm not saying you can't have them, but for the most part, most of the time your trend lines are going to be like negative 30, or it's going to be like this at that angle, or it's going to be like at this at that angle, it's going to be at this at that angle. Conversely, for like an uptrending market, it may be at like this or that angle, this or that angle, this or that angle, this or that angle. So you don't necessarily want it to be like too aggressive, okay, with the angle that it's at. But let's just say like you have this trend line drawn, okay? So we're gonna keep on seeing what this market does. Let's just see. Okay, so although this was a little bit sloppy, it did go above it. It did respect this trend line, but that's also why I say this is when you kind of have to just be able to play with your trend lines a little bit, because if we decided to go back real quickly and we went from here to here and we kept these two wicks and kept that angle, you would see now that trend line like hit this area almost perfectly. You see that? So like 1, 2 came down, hit this. So we didn't have the trend line coming down here and catching this. And even if I saw this in real time and I saw it respected here, I may even just adjust my trend line and be like, okay, I feel like this is gonna be the true trend line area. I might say that. Are you wrong for having it here? No, because this area was still tested. Not one single candle was formed above that trend line to break it. And the same rules that apply for a break of a support level or resistance level are the same rules that apply, like when we said on one of the previous videos, when we said you have like a break, then you have this, and you have this. This is the same rules that applies. Like maybe like you have like this, or you have this market like this, and then it broke out. The same rules apply for the trend line. So it's just the same rules. And it's like, if you have like the market do something like this isn't a break. It'd be this full candle that broke the trend line. So if you saw this formation in this area, that would be a break of the trend line. Okay. Just a quick refresher on that, but it's the same rules that apply. Okay. So let's just keep going with it, but I will maybe just adjust the trend line. And like I said, that's the reason why I do use trend lines, but I also don't like rely on them for like super specific like entries or anything like that. It's more so just to have an idea of where the market may be respecting or may be retracing off of. Okay, boom. So now we have like this little kind of lower low, lower low, lower low forming. I could even draw a nice little potential trend line right off of here, right off of here. And like I said, so point A, you're starting at this wick, you're catching that second wick for the most part. And then the third wick, you can kind of play with it a little bit. Now remember, I feel like you should always try to catch as many wicks as you possibly can. So if I'm catching the second wick right here, boom, that's a good sign. Boom, boom. So now I have like a little bit of a channel forming. And when I get into triangle formations, you'll see kind of how we use these formations to, or these triangle formations to help us understand what's going on with the market. But you can see the market looks like it's breaking out of that trend line and potentially retesting. And it shot up a little bit, okay? So once it broke out of this trend line, like everything below this trend line, this is called like a sell zone. So everything I'm doing below this trend line is like where I'm gonna be selling. Once it broke this trend line, got above this, now I say that in terms of just trend line training. I'm not talking about if I was analyzing this market using all the other things that we use to enter trades and stuff. Strictly speaking, for this video for trend lines, if I was below this trend line and I had like it bounced off here and it was in this area, all in this area, I would have just been looking for sells. And then once it broke the trend line, my trend line, I'd have been looking for potentially buys. Okay. But again, that's just, I would have been using like everything. I would have been having like little support levels drawn up. I'd have been knowing lower lows, lower highs, fib retracement, all these other things I would have been using to take the sells. But overall, I would have been using this to determine that this is like a sell zone. I'm mostly looking for sells. Okay. That leads me to my next point, which is very important, is that trend lines are used. I use trend lines mostly on like a 5 minute to get a counter trend line, and then the daily to find like maybe a buy zone or a sell zone. So let's just say I was on the daily right here, and let's see if we can find a really nice one. Okay, so let's just say I was on the daily, right? I was on the daily market, okay? And I had drawn like a little trend line, something to this effect, something like this. Bring this down a little bit just to catch these extra wicks. So let's just say I caught boom, boom, boom. Everything below that trend line to the south of it, everything below in this area would have all been sells. I wouldn't have been looking for buys until the market came up, created a higher low right here, broke out of resistance. Remember, higher low times resistance break equals bullish market. Everything now above that trend line is now a buy zone. So I'd have been looking for buys all in this area, just buys, buys, buys. So what that means is that the reason why I say the daily is because if you can find a trend line on a daily and know whether or not you're in a buy zone or a sell zone, that can help you determine if you're going to be wanting to take more buys or more sells. That can help you. So just keep that in mind. Just keep that in mind that that's something that can help you with buys or sells. Give me 1 second. Okay, so that can help you with buys or sells, knowing if you're in a buy zone or a sell zone. So then I mentioned earlier, we'll go back to the hour. I mentioned earlier that we also have a concept called counter trend lines, okay? So for the most part, when you're drawing a trend line, the trend line means you're drawing with the trend, literally. So if I'm in an uptrend and I'm drawing a trend line, this is a trend line, right? It's going with the trend, okay? If I'm drawing a counter trend line, what that means is that the market may do this, do this, do this, and then the market started to create some lower highs, and it started to flow a little bit counter to the market, okay? So what I could be doing to draw a counter trend line, because the overall market is bullish, a counter trend line would look something like this now. Okay? The trend line is boom, 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 boom. It's counter to the overall trend line. It's counter to the overall direction of the market. So the market was in a bullish market, right? And then we started to have lower highs. Okay, lower highs, lower highs, lower highs. So I drew a counter trend line because this line is counter to the overall market. The red line is counter to the overall market, okay? So the reason why you draw counter trend lines is because a lot of times the market will do this even though it's maintaining its overall bullish flow. And then what will happen is it'll eventually break that counter trend line plus a break of resistance, and then it'll come back down and test that counter trend line, and I'll have like a potential entry base point right here and take the trade, take the buy. Okay, so that's a lot of times that's what you'll see. But counter trend lines are really, really good to help you identify the market. A lot of times, the reason why I say that on the 5 minute, I use trend lines a lot on the 5 minute, is because a lot of times you'll see this type of formation on the 5 minute. Like let's just say overall in the overall market, like say you were trading like the hour or whatever, you had a break of the resistance, say a higher low, and then the market came back, retraced, and you're looking for a potential buy in this area. In this area on the lower time frame, like a 5 minute, the market may have been doing this. Say it was doing that, came all the way up, and then it started doing this. It started doing this, right? All of this like downward movement is happening all right in here. This downward movement on like a lower time frame would have been like happening all the way down here to get down here. It would have been doing that, right? So what I would have been doing is I would have been drawing a counter trend line on like the smaller time frames. I would have been drawing a counter trend line on the smaller time. I feel like this needs to be right here. I would have been drawing a counter trend line on the smaller time frames to see when this market was going to eventually break the counter trend line and then draw back up for an entry. So that's what I would have been waiting for. So let's just say my counter trend line was drawn somewhere in here on the lower time frame. So it would have looked like this on like a lower time frame. But overall, the market's still trending upward. And if I was still like looking at the overall trend of the market, it could have been looking like this, and I had my overall, like my hour trend line drawn something like this. So this is still my hour trend line. But then I had like a counter trend line on the 5 minute really quickly, and then it finally broke that counter trend. Now I'm back in a buy zone, broke out of resistance, higher low was created, boom, entry base point, and I would have caught the entry somewhere in this area, and then boom. Okay? So just always remember that a counter trend line is counter to the overall trend, and a trend line is just going with the trend. So let's just go on the market and just draw a few more of these just to make sure we understand that. Okay, not super aggressive, but I could go here and draw like a little trend line right here, or kind of like a counter trend line. This market's kind of consolidating, but see it's pointing down. So this market's kind of consolidating, just moving sideways, so it's kind of pointing down. I could have maybe drawn a trend line from like, maybe let's just take, and you see how I'm not being super picky. It's like I'm just trying to find these areas. I'm not being like extremely picky. Like boom, a trend line right there, boom. Okay, symmetrical triangle forming. We'll get into that in a second, but let's just go ahead and look at some more. Let's just see if we can find some more, some pretty clean ones. Okay, so here's a counter trend line we're about to draw right now, okay? And I'll start this right here so we can see in real time how we can plot this out, okay? So here's a counter trend line I'm drawing on the overall market, right? So the market's been tracing up. We're in an overall bullish trend, higher highs, higher lows, okay? Boom. So remember, I can't draw my point B until I can't draw the second part of this, my trend line. I couldn't draw it before I had like the second point. So I can draw like this. I can draw this right here, and then boom, like I can draw this. I can't draw this anywhere. Like I don't know where the next high point or whatever the higher high or the lower high is going to form. So I have to just wait till I see the market form. So always just remember, like the market did this, it did this. You can't draw a trend line just yet because you have nothing to base it off of. So you have to wait. When the market does this and then maybe does that, now you have your second point. Now you can begin to draw, place the trend line and start to plot, okay? And then potentially, and it doesn't always happen, like it doesn't always get respect right here. You could break through that just like that. But ideally what you're trying to be looking for in terms of using the trend line is it comes up here, bounces off of that, then maybe you got like a higher low, then you have a little break of resistance, and then finally it broke, retest, shoot up. Those are things you can look at, okay? So, but I have to wait for that second point to form. I can't just draw it just, out of nowhere. Okay, looks like a nice little second point has formed. So I'll go here, and maybe I'll take that wick at that angle and just see what I may have next. Let's just see. Okay, so on the bottom, what you'll see here is I'm gonna start drawing this one because I had the first point, then the first point on the bottom, then I had the second point on the top. So I'm gonna coordinate this. One, 2, 1, 2. So then I can grab kind of like a trend line because it's going up, it's going with the trend. So this bottom one is a trend line, the top one is going to be a counter trend line. And then let's just see what happens. Okay, so kind of came up, respected that. So I may even adjust this trend line now to something like this to catch that. And just say that was a heavy wick, but the true respect was going to be down here. So see, this is what I mean by being dynamic and just adapting with the market as you see it. Okay, so it looks like that bottom trend line may have been broken. So I potentially may like negate this. And typically, like I said, like if the third point on the market, the third point doesn't always have to respect. It can break like we just saw on the bottom portion of this trend line right here. Like it can break. It doesn't always have to respect. So just keep that in mind as you're going about drawing trend lines, okay? Okay, so for now, because this area was kind of broken on this trend line, I'm just going to delete it. I'm just going to focus my attention on this counter trend line because I'm still in an overall uptrend. But I'm just going to focus my attention on this counter trend line. And a good rule of thumb, like you see how I'm just moving the trend line, trying to catch as many wicks as I can. That's a really good rule of thumb. So like, that's not bad right there. Market broke out of the trend line, retested it perfectly right here. Retested it again perfectly right here, and then shot up. This is a perfect example as to what I said earlier with the counter trend line. Market was up in a bullish trend, then you started having kind of similar lows. So you kind of had similar lows right here. I'll actually draw a nice little support level. So you kind of had similar lows. So this was a higher low compared to the higher lows, the higher lows down here. So higher lows and the same low, respected area. But you started having lower highs. Boom, counter trend line was drawn. One touch, two touch, or one first area, second touch, we started the trend line. Third touch, came back up here, finally broke out, engulfing candle formation here, came up, retested once more, and then shot up. It's like a breakout formation. So that is kind of how you can draw like a counter trend line in this situation. Now, we will move on to I'm going to move on to triangle formations because this is a perfect example where we should transition into the triangle formations. So triangle formations there are three main triangle formations, okay? Okay, so there's three main formations, right? So an ascending triangle, a descending triangle, and a symmetrical triangle. What is an ascending triangle? So an ascending triangle is essentially a trend line or a market where the bottom portion of the market is ascending. Hence the name ascending triangle, okay? So what we would have is not necessarily a trend line, more so of just like a resistance level. It's like respecting like a resistance level at the top. But on the bottom, you have a trend line that you've drawn that's respecting higher low, higher low, higher low, higher high, same high, same high, same high. So it's respecting a resistance level. It's creating higher lows. It's ascending. It's getting higher. It's ascending to the top. It's going up. This market is going up. This is called an ascending triangle, okay? And typically when you're drawing an ascending triangle, you'll look for like a breakout maybe on this side, then the retest and the buy would be somewhere like this. Or you may have an ascending triangle and it breaks out of the lower half of the section, breaks out of that support, comes down, respects, and then creates like a lower high, and the market begins to create a bearish market. But regardless of the direction of the market, this is an ascending triangle, okay? Very simple. A descending triangle is the exact opposite thing. So the market's doing this. So you have like a support level that you have drawn, and then you have a trend line or a counter trend line or a trend line at the top, depending on which direction the market was going originally. So you have like a trend line. And so the bottom now, the support is just lower low, lower high, low, lower high, low, lower high, low, lower high, same low, lower highs. You're getting lower at the top. The market's descending. It's going down. It's descending, but the support level is kind of staying the same. So you can see it's a descending triangle. And if I remove these lines, you can just see if you were drawing these triangles, this triangle is going down. This triangle looks like it's pointing up. It's ascending, descending, okay? And as you can see in this example, this is a descending triangle, okay? It looks exactly the same as this. You have your support level that you drew, and then you had a counter trend line based on this overall market, a counter trend line. But this can also happen with a market that was already coming down. So it could have looked like that, and then it came into this descending triangle. So the same thing with this one. The market could have been coming down, and then it started creating the ascending triangle, or it could have been coming up and then created the ascending triangle. Either way works. But for this one, you can see a perfect example of a descending triangle. Okay, the top is getting smaller, the top is getting lower, the bottom is remaining the same. So lower high. So we're here in the market, right? Came up, higher high, higher low, lower high, higher low, or same high, higher low, or just a low, sorry. So higher high, higher low compared to everything else down here. Higher high, higher low, lower high, same low, lower high, same low. The market is creating lower highs, but it has the same low, so it's a descending triangle, okay? Let's see if I can't find any other ones. Let's see. Somewhat of an ascending triangle right here. If I were to remove this, and I was just going to keep this triangle right here, or that trend line on the bottom, take this area and draw a support or a resistance level. This is a good example of an ascending triangle right here. So same concept as over here. Same concept right here, right? So you have the market was coming down, it's getting higher at the bottom, higher low, higher low, higher lows, high, 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 or higher high, high, high. The same high, the top is remaining the same. The top is not moving horizontally, but the bottom is still getting higher every time it touches. That's an ascending triangle, okay? And then lastly, a symmetrical triangle is just right here. So say the market's doing like this. A symmetrical triangle just means the top and the bottom of that trend line area that you're drawing, the counter trend line or the trend line, they're both pinching to make like a true triangle. It's like a true even-sided triangle, okay? That's a symmetrical triangle. The top is getting lower, the bottom's getting higher into a pinch point, and then eventually the market's either gonna break out here, go here, or it's gonna break out here and go here. Okay, one or the other. But this is a symmetrical triangle, okay? I'm trying to see if I can find one. Let's see. Kind of right here, so you have like this right here, and then on the bottom you have like this right here. So something like that. Okay, symmetrical triangle. It's getting lower at the top, it's getting higher at the bottom. Boom. Then finally the market broke out. Okay, we're going to bearish market. Broke out of this support level. Boom. Okay. So I don't think this video is going to take that long, but I'm going to stop here. This is going to be just a trend line video. I will pick back up with exhaustion zones and whatnot on another video, but that's essentially trend lines. With, again, just always keep in mind with trend lines, there's 3 different types of triangles that you can use trend lines on. Ascending, descending, and symmetrical triangles. Also, always remember that you need like a second point. So you have like the first point, you need a second point to confirm where you can draw the triangle. You can draw the trend line. After you get that second point, be open to moving it around to find and confirm like that third point. Like it may be here. It may have been a little higher when you had the new points formed. You can move it around a little bit, but for the most part, when you have that first and that second point, you should be pretty confident that this is going to be the market. Like if I had this right here and I was drawing this, my original trend line would have been point A, point B, then point C, then it kind of broke out. So maybe like it's at a little more aggressive angle. Always keep in mind too on the trend lines, like I said, that's just like -8 right there, 26 degrees right there, -8 degrees. It shouldn't be like -50, 60 degrees. That's not a trend line. You need to just get out of that, okay? Just practice. That's the main thing with all of this, but those are the 3. So yeah, and just remember, a trend line is going with the trend, and then a counter trend line is the market counter trending against you, okay? So right here, we have a nice little, somewhat of a trend line right here. Boom, 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 boom. And then eventually what we had was a counter trend line that we could have maybe potentially drawn. Like something like this down here. Because you see the market's bouncing off. It was in a bullish market for a little bit. Now it's counter trending, and then it's getting back in sync with the overall bullish market, okay? Okay. I think I already drew this one. Yeah. And that's a good point to make. Lastly, is that trend lines can last this long. It's like they can last like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Like they can last that long as well. That's perfectly fine. Okay, it doesn't have to just be 1, 2, 3. And it's gonna break on the third one. You got to adapt to the market and be dynamic. Okay. So those are trend lines. Practice these. We'll go over these more. But you, again, with everything in the market, you can just sit at your office, sit at your desk, 5-minute lunch break, whatever, and just draw these out and practice them. Practice them in your mind. Practice them when you're just have any free time. Just practice, okay? The more and more you practice, the clearer it will get. Please refer back to this video for any questions or to confirm or clarifications on anything. But if you have any questions, feel free to let me know.